Hey guys, it's Simon with toughtrader.com and Trade and Perform Coaching, doing the trade review for, let's see, it's the 14th of February. We're still open, but I'm done with my day, at least by miles and miles. So first of all, obviously we gapped up and we ran pretty hard, and I wanted to go look at what the elements were that let us know. So on days like today, what I'm particularly concerned about is, we get gap down, and what I spend most of my time figuring out is if I can short these run-ups or not, or if I'm going to get smoked in the process. So there was a couple clues, and I'm going to go through them step by step so that we look at process versus what actually happened. And even if you couldn't or didn't put the pieces together, it's certainly, and I'm referring specifically to ES, then I'll do NQ in a second just as a shadow. It certainly helps to know to avoid the losses. So let's go and look at this one by one. So first of all, we were gapping down, right? So we do a couple of things when we look. This was, let's pull this up, and then let's flip over to the TPO, and let's go to ES. Okay, so this is this morning, and the first thing that you'll notice today is that, so we have a checklist, right, of how the point of having the checklist when you're trading is to offset the emotion of wanting the market to go, in your favor. And then what I find most people have to do is they're balancing the preconception of, like, for example, I would have really liked the market to go down yesterday and it didn't. Your perception that maybe the CPI number that came out this morning would be negative for the market, right? And all that can add into coloring your perspective. So you need a way of filtering off that perspective so that you can make a good logical trading decision, right? So let's start from the beginning. We were gapping down and we knew that the low would be ugly. And the first thing that we knew is that Globex low, I believe, came in like at 26.27. Guys, someone correct me if I'm wrong on that, but I think I'm going to pop this up real quick. That is correct. Let's find out. Globex low was 26.27. That's correct. Good memory, right? So look right from the open. Let's go and break this down step by step, right? We open up, literally the opening price right there at 26.44. So why is that helpful? If my value area low was sitting at 26.34 and we open up at 26.44, then the first thing, and I repeat this over and over every day so that you have an automatic filter, the first thing that has to happen is that we have to get below this spot right here. That has to happen. Otherwise, you can't come up and check up on prices below, right? So we don't get that. Secondly, our first half-hour bar was pretty much straight up. Our next clue in that process, we would normally expect a rejection out of an area like this, right in here. And what you'll see is we did get a rejection out of that area. But that area, normally, if you look on other charts, you'll see that area usually provides a large counter rotation, right? And then the last piece is this would normally hold the market down. That's usually going to be, that's your volume point of control. Excuse me, I stand corrected. That's correct. Volume point of control from the prior day, and you would normally expect rejection out of that. The most important part of the chart from there was the value area high. So then we're going to go and look at how this broke down in 5 minutes. And once we consolidated, I say this almost every day, if you consolidate above value area high from not only from the prior session, this was untested, I stand corrected. This was the value area high at gap fill, and we consolidated above the value area high. Sorry, I lost track of my days, right? And we never got back below value area high. So this area right here, once we got above 2660, 2662, and it's laid out there on the chart, right? So once you get above that area, you really kind of want to go, well, look, there's zero chance that I get a short that works very well today, right? This is a full prescription for trend day up. And even if you can't find a way to get long, you certainly don't want to go and get short. And that's half the battle of keeping your, right? It goes into the prospect of keeping your money. Also, remember, a lot of people, myself included, I thought we would have a bounce, consolidation, and continuation lower. Wow, that did not work out very well at all. Let's see if I can fix that. There we go. And continuation lower. That was my read on what was, that's not only was my read on what was going to happen, it's what I wanted to happen, right? I want to shake this thing down because I was hoping that it would open up the two-sided volatility, right? So you got to remember, when I'm coming in, I'm doing the exact same thing that I just described. I want the market to go down, but I need the reads to come off in proper order so that I can press that position. Next, if we go over to the 5 minutes, so that's the big picture look, right? The overview. Then if we come down to the first 5 minutes, so we know we're above value area low, right? We know we opened in a white zone and immediately cleared above. So our next clue, even from the small time frame, we have 1, 2, 3 attempts into that white zone. That is the unable to get back below the white zone and responsive buyers each time. Clue number 2, and you had 5, 10, 15, 20 minutes. And you'll also notice, because what the purpose of the chart, remember, even if I'm not necessarily trading my own levels every time, the purpose of the chart is to lay out location where you have high odds. Look at the rejection. 1, 2, 3, 4 times it rejected below here before finally pushing back up, right? Pushing out, and then when we push above, we backside tested. So look what's happening right out of the way. This is the first half hour. Here's the first 5 minute low is never penetrated, right? We've now closed over the body of the first 5 minute low, and before 9 a.m., we've now closed above the first 5 minute high. I'm going to spread that out so you can see this really clearly. Okay, so some people want to talk about having indicators and let me see the market strength. Well, this is really simple. You're just simply reading the market at this particular juncture, right? You're like, hey, 4 attempts, can't get below. We can't get below the first 5 minute low. It doesn't matter how strongly convicted you are that the market might roll over. You needed to get below this bar. Next, not only that, if you get above this bar, you're now going to likely end up with a push to the upside, right? What do you need to see to defeat this close? Is a close below this 5 minute bar. And a lot of people will go, well, how will you know by the time that happens? It doesn't matter, right? The fact of the matter is what I wanted was that what I would have liked to see would have been an open up, I get below this 5 minute bar, backside test it for continuation lower. That would be my short setup. That never occurred. So even though I'm not finding a way to get long, and even if because I'm a little bearish, and it's the beginning of the day, CPI number, et cetera, I'm not taking a long in these areas, right? I'm still not flipping around going, well, I've got to short this. Let me short this and find a way to make it work, right? Next, this is the volume point of control. I noted it. Note that we blast the gap fill and the volume point of control and promptly close above and never get below. So now you have above value area high, right? Inability to break below the first 5 minute bar, close above the first 5 minute bar. Instead of rejecting and rolling down from the low volume node in the profile, we've now closed above it and backside tested it, pushed, had no rejection from the volume point of control, which is normally a place you would expect at least a pause and rejection. Close above, straight into Tuesday's high, an inability to backside test the volume point of control. Now, the reason why I lay this out is because all of this happens, right? All that happens before 9:15 in the morning, my time, Central Time. That's the first 45 minutes of the market. And you already know buyers are in absolute control. And so here's where traders get in trouble. What they see is they go, hey, I've totally missed everything involved here. I've totally missed the long. I've missed a roll from 2650 to 2667. You feel like you've left a lot of money on the table, and a lot of traders will turn to start fighting this. What are we looking for, guys, in the room? What are we looking for when we're trading, right? The first thing we have to do is get underneath our last best seller. That occurred, the first time that occurred was right here, right? But there was absolutely no reason to short here. You've already rejected. You haven't shown any ability to push lower, and you're generally making higher highs and higher lows. You really would have wanted to see an impulse move lower than a rotation back. Again, if you'll look, each time we're dipping underneath our last best buyer, it's not a huge move underneath. We're barely squeezing under and then getting immediate responsive buyers again, right? Also notice that the tick, again, you're keeping track. When we open it up at over negative 1,500, right? It's really hard to maintain that much negativity out of the gate. People are panicking, and you're going to find responsive buyers quite often. And that's not to be confused with it was an easy long, because I don't think it was, because the rotation of these bars are essentially, this is 10 points up and down in this whip for 20 minutes. I don't think that, in my book, that's not easy unless you're a swing trader, right? So then we get above Tuesday's high. What's the one thing we know? You got to trap back underneath Tuesday's high, and they tried. See this? They tried, but what you wanted in that trap is you really wanted to come in If I can get this to work. What you really wanted was for them to come underneath, backside test that volume point of control, because this is your first major test right here between here and here, right? You had to have to get below this. And then what you would have wanted to see is either come in, then backside test this guy right here, and then roll to the downside, right? That's what you would, if you were going to get short, that's what you wanted to see. But notice there's almost no extension to the downside. The tick, plenty of opportunity to go negative there, not a shot. And then if you'll notice, when we finally do go negative, down to negative 600, notice that the bars can't break below the prior swing low. Another big clue, right? So the next logical place is, well, where's the next place? So what people will start to do is they'll start to get desperate and they'll look at the rotation size, and then they'll say things like, that can't keep going up, it can't keep going up, can't keep going up. Instead of doing that, I suggest you switch to, what is the market telling me, right? And what is the setup? So if you'll think, if we use our base model, I've got to get underneath my last best buyer. This bar became the first one. You couldn't get an extension. This bar becomes the next. This bar, and finally, this bar becomes your next one. I'm not going to call this one my best buyer. I'm going to call this one. And notice, we can't get underneath any of those bars right there. Now, if you, I'm going back to the traders who struggle with this, right? If you're a trader who's like, gosh, it just can't keep going up, instead of going and trying to impose your rules on what the market can or can't do, just go, hey, let me get underneath my last best buyer, and then we can talk. So if you'll look, even here, see how we can't close underneath the last best buyer? You're still not short. You then have pushed, right? Notice that we're not getting underneath our last best buyer through any of this until where? Finally, right here. This is the first time you get underneath your last best buyer. Obviously, buyers are in very strong control, but if you use that, this would have been the first place, at least in my book. I would use this guy probably right here. Yeah, probably this guy. Hard call. Let's just say I use this guy right here between here and here. And if you look, you get the smallest counter rotations, and then they go kill them, right? And if you'll notice on each press down, we have an inability to get back below our last, and I use the term very loosely, swing low, right? So then the market comes back and pushes right up against. So what's going on right now? We're getting a negative 600 tick. These guys are pounding to the downside here, right? Negative 600 ticks, decent sell pressure. It's the best sell pressure. We're seeing the best sell pressure we've had all afternoon, right? So if you watch this in real time, right, we're getting sell pressure, and we can't get below 26.95. Guess what happens if you can't get below 26.95? They're going to squeeze this thing. If you cannot close below 26.95, they're going to squeeze this thing straight up on the close. That's what's going to happen if you can't get below here, because there's been people who are going, they can't take it straight up. These are the weak hands. They're going to roll it over. And this is OTF in action, right? And they're going to keep coming back in, stepping and pressing, right? What changed? So does anyone in the room, guys, does anyone have any questions over that? Does that all make sense? That is how we managed, right? So that's why this morning I was like, no longs, right? But stay balanced on the attack so that if there's an opportunity, we can get it, but don't jump in front of it. It sucks to see the market run so much and not get paid from it, but it sucks even worse to sit there and try to short it just to find a trade and then have a negative P&L. That's the worst. Okay, guys, I'm looking. Doesn't seem like there's any questions. Okay, let's run to what changed in the price action. So if we take a blank chart now, I'm going to duplicate this chart. What were the clues that the price action had changed? And we're going to go to 15-minute bar so we can see it pretty easily. Okay, so we're going to go back. We're going to crunch this down. Okay, so notice a couple of days ago, the first thing that I saw when we were starting to roll to the downside was that, number one, if you look through this whole roll thing all the way through here, so this is the beginning of the breakout. So this is the first thing I saw on each of the days. We close below the first 5 minutes. We close below the first 5 minutes, right? See that? We close below. That started to roll to the downside. And you had plenty of time to get short underneath there, right? Couldn't get below the first 5 minute bar. We rallied, right? On the 7th, couldn't get below the first 5 minute bar. We rallied. Notice the following day, the 8th, we open up. We close below the first 5 minute bar definitively, and we roll to the downside. We gap, close below the first 5 minute bar, roll to the downside. Now, here we gap, right? Close beneath the first 5 minute bar, roll. What's the difference here? Notice on each of these, when we came into the gap fill, so now you got to go and get a little more detailed in your work, right? Gap fill. A couple things to note. See how this is actually the gap fill here? Okay, so it's been a while since we've had to mess with this. So these are old rules that we're bringing back. When you have a gap fill and you miss by a couple of ticks completing that gap fill, that is bullish. Okay, when you have a gap fill and you miss filling that gap, that is bullish. And then look what happens. As soon as we get back over here and we close above the first 5 minute high, which happens right here, we backside tested, then continued higher. I realized that it rolled back at the end of the day. But those are your two pieces. So now you can add a second piece to that formula. Do we close below the first 5 minute bar? And then do we close below the bar with the gap? That's the next question. And within there, obviously what we're doing is navigating those levels on a smaller basis, right? The other thing you're going to notice is notice the abundance of red. Red candle, red candle, red candle. The green candles that are big are few and far between. Look, all of a sudden we end up flush with huge green candles, right? This is the first day within intraday on the 9th that we're able to close above the first 5 minute bar. So these are all things you should be writing on your checklist to help you stay balanced when you're trying to make trading decisions. And I say this, right? But so there's a trick here, and I feel it's an important trick, right? People talk about doing this, myself included, but the actual work of doing it and actually maintaining that list so that you know what you're looking at is a pretty tough occupation. It's pretty hard to do. Let me get some tea real quick. I got it right here. And you're either a person who can separate all that stuff out in your mind, or you need an actual physical checklist, right? But when you sit back at the end of the day, one of the things I do when I'm done trading is I sit back and I take a look at a picture like this and I go, oh, right? So I noticed this. I said, things changed. That's why when we were over here on the 12th, I was like, be careful on the shorts, right? Things changed, okay? Then we got over here. I figured, okay, we have 2 days of consolidation, right? And then if I had simply gone through yesterday, if I looked, right? If you remember yesterday, so this is what my change of heart, and this is what I wrote before market, right? So I want everyone to kind of see this as we're going through because it made a big impact on me. Okay, and I really had to think it through. I was up late last night. I was up early this morning, and I wrote. So this is at 6:30 in the morning my time. Got done with my workout, started thinking through what I wanted to do for the day. And I wrote, market is behaving as if last week was a one-time event. When there is real uncertainty, the volatility does not disappear overnight like this. Volatility over the last 2 days since midday here is gone for the most part. There's some jitteriness in the bar, but it's gone. Number two, additionally, we are trading above prior sessions value areas, which gives support to buyers. 2,700 on ES is the 50 retrace, and I sure would love to fade that, but the huge downside appears to be gone. Okay, so notice, where did we trade up to? 2,700, right? That was an obvious target for everyone. And I said, all that means is by key levels and look for the push back up as long as we are above prior day's key areas. Below, look for pushes down, but not massive falling apart. Why did I say that? Because the character of this whole thing is shifted up, right? And sometimes we have to sober ourselves up really quickly, particularly when last week was so nice because we made a lot of money, right? And so then you have to flip around and sober yourself up really quickly. And so it's funny. I was talking to a trader this morning who killed it this morning, killed it. His biggest trade made 10% on his account in the It's one of the members in the room, but I don't know if he wants me to share it with everyone. So I'll just say it's one of the members in the room, and he killed it, and he did a great job. And the first thing I responded to him was like, okay, great. Good job. Nice work. Now pretend like it didn't happen. Go back and review your trade plan and take each setup individually, because you're either overexcited or he was short. You're going to get a bearish mentality and end up then this thing can rip back the other way against you, right? So all those pieces, what triggered that was when I was staring at this exact time frame, and I said, what's the one outstanding character that has changed here that was working so well in all of this? What was the one thing that was changed? And I said, the consistent close below the first 5-minute bar, which we've been missing, and the ability to get past gap fill. And secondly, the size of the downside red bars has just disappeared overnight, right? And I said, for my own self-preservation purposes, it's time to stop shorting. It's time to stop pressing those shorts. And if you look now, right, look at the ratio of green bars to red bars, number one, even yesterday, and then look at their inability to push down. They've just collapsed. The downside bars have just collapsed in size, right? And what really got me to that yesterday, sometimes when you don't get what you expect, the data within not getting what you expect is very valuable. And so if everyone recalls yesterday in the room, I was short NQ, and I was short 27. Originally, I was short NQ 66.20. I was short 66. I think it was right in this area right here, because I remember because I was talking to someone. Short 66.20 against 66.50, if I recall originally what the short was. And then I tightened it up, and I actually tightened it up right in here. So actually I took some heat as it pushed up, and I think I shorted it actually right in here. Oh wait, that's today. Excuse me. Now I know why that chart looks so odd. I shorted it right. Wow, it was even earlier than that. It was 65. Oddly enough, it was 65.20. My figuring was we started to put in a lower high, and I figured I could short the backside of push back into the 65.20 for a roll back to the downside. I was still being optimistic, but the size of the bars were still okay, and we really weren't busting past what was resistance then, right? And I got down here and I wrote, we have extended down 20 points. I wrote this on the stream, right? And I said, I am holding this for the swing, so I'll get stopped. I moved the stop down to 65.33. And I said, I will get stopped. But if you want to take your profits, go ahead, manage it to your risk parameters, right? So here's where I screwed that up. 20 points is $400 a contract I had on the stupid trade, right? That's a lot of money. Most people would, in some countries, you could get killed for that, right? And I didn't even take one stinking contract off the trade. I was like, I'm getting 100 points. We're going down here, right? We're going back to Tuesday's low. We're going to go back and retest the lows. This is all BS, right? And what I realized there is, even though I had mediocre location, right, I'd gotten underneath my last best buyers. So I followed process. There was nothing wrong with that, right? The backside of the last best buyers was 65.21. The location was okay, right? My stop was above my last best buyers, right? Where I was still smoking the weed from a week ago that said that we were going to roll to the downside and go down 100 or 200 points. And I looked 20 gift points in the mouth, in the face. What's that? Horse in the mouth? 20 gift horse bucks in the mouth, right? That's $400 a contract. And I said, I'm not taking any of it. And that's when I realized I'd made a huge mistake from the way I was approaching the market. So what did I do? I went home. I was hard on myself. I reset my attitude for today. And let me tell you why that was important. That was important because when I saw this morning, when you look at this from a 24-hour chart, and you see this can make you very, very emotional right here. This can make you a very emotional trader. You can think it's going to zero and it's never going to stop. Wow, look at the selling that must be involved there, right? And that is where your trading comes in, and it can really clock you when you get that mentality. And what a lot of people do as well, I'm going to short the 50-60 retrace, right? Well, let me tell you, that short lasted for all of about a nanosecond before you got run over, right? The next clue, and I'm going back to my room for those guys who trade off the 24-hour chart, we all know what the setup is right here. You all understand clearly what the connotation is of these two bars. I'm not going to go over it, but another sign that the party was over, clearly, right? An inability from the time we started, so this is down, an inability at any point, right, to get back to the fifth. Actually, I take it back. We had a 50 retrace right there, and I think we had one more. Oh, that's correct. That was a 50. There's the first 50, and there was one more 50 retrace intraday from the open. This was a 50 retrace from the open right here. All right, see that I pointed out early in the day, and then we had one more right here that I pointed out, right? An inability to get behind the 50 retrace from the downside up, right? Lastly, if you'll notice, so I'm going to build this block by block so no one gets confused in the future, right? So swing low, swing low, swing low. If you pretend like the market opened on 7:30 when there's big data, right? What am I always saying? At least break a swing and get a backside test before you get aggressive. Well, notice swing low, swing low, swing low, pseudo swing low. There's not even really a swing here. There's no push down. That's your next swing low, right? So now we know this is what's got to get broken to even start a downside move back to the downside, right? This is what has to happen right here. And so even whether you were working off a 24-hour chart, right, guys, and particularly guys I'm coaching one-on-one, right, this should all be in a checklist for you, because when you're adrenaline pumping and you're moving a lot of contracts relative to your account size, right? Oh, and before I finish, I forgot, so I got to post this really quick. Past performance is not indicative of future results. This is for educational purposes only. There's a lot of risk in trading futures. If you do it wrong, you can lose all of your money and more because of the leverage, right? Please have a risk plan. Drawing down or blowing up is unacceptable, okay? So stop trading if you're losing money. That's my biggest and best recommendation. If you can't do it in paper trading, you can't do it with real money. If you can do it in paper trading, you might be able to do it with real money. That's my 2 cents. You might, okay? So that is all of how we identified a trend day up. This is the entire reason why there's nothing in here for me to look at and go short, and it has saved my bacon all day long. So am I long? No. Did I have some scalps through the course of the day? I did, mostly off of the backside tested Globex high for pushes back up, and I got tired about the middle of the day, and it was a long night for me because it was really every bone in my body was bothering me because I was underperforming the last 2 days, and I had to go back in and go through my checklists and look at what was really happening versus what I was wanting to happen and get myself straight, okay? And as a trader and as someone who makes a living from the markets, right, you've got to submit your will to the will of the market, right? It's not what you want. It's not what you think. It's not what you perceive. It's not what your theory tells you, right? Look at the damn bar. If you can't break a swing low, if you can't get below your last best buyer, right, you don't have a short. And yes, what if you get this, okay? Well, what if, right? Okay, so this is a once in every couple of months move, and this is pretty much every day, right, for the last couple of years. Which one would you rather be a specialist in? So that's my 2 cents. And does anyone have any questions in the room? Guys, give me just 1 second. I'll be right back. Okay, guys, sorry for the delay there. So, sorry, guys, for the delay. So I'm going to have to get interrupted one more time. I apologize. It's my wife. Give me 1 second, guys. Okay, so does anyone have any questions? At the end of the day, that's the big deal, right? Is not getting run over, not losing money. And if you don't think we're going out at the high of the day, that's it. That's picture perfect trend day up. And I wish I caught it, but they're hard to catch. You had to make a commitment right out of the gate. I'm sure some people did. Not only did you have to make a commitment out of the gate, you had to realize we were going to 2,700. That's a hard thing to do for most day traders. And you don't have to do it to make a boatload of money day trading either. You don't have to. Look where we identified from the day session. Look at this. These were the areas we had on the day session. I pointed them out multiple times. This is on NQ, right? So we still had it drawn, the 50-60 back, right over here from this, and then the multiple backside tests. And I know, because I sent messages, I pointed this out right here. Backside test, all of those gave extensions. And then that's right when I came in the room and I said, you're probably going to get a lift back to 66.33 off the 66.02, right? And notice we rejected right out of the white zone first time in, well placed. I was happy about that. And my guess is that we will achieve 67.15 to 67.48 in the Asian session. Looks like we're running out of gas here for the end of the day. But my guess is that they'll achieve that in Asia. Maybe not, right? Your first clue that we are moving lower. This is your big consolidation onto the left. You don't break that, you don't have a short. You got to get underneath these guys. They're going to defend the first time, or else they're going to push. Helpful, guys? Any questions? If you're watching on YouTube and you'd like to join us in the room, send a email to tradeandperform@gmail.com, tradeandperform@gmail.com, and I'll be more than happy to extend you a 5-day pass into the room. Okay, guys, then I'm done. I would not short this close. And the liquidity's back. Look at the dome. Tons of liquidity in there too. See that? What a snow job that downside move was. Anyways, market's back. Just got to go and make some money with it. Talk to you later, guys.